shares of Amazon dropping 3% today after Wells Fargo downgraded the big tech stock from overweight to equal weight, citing slowing growth expectations and competition from Walmart. But Brent Thill of Jefferies is still bullish on the stock. He currently has a buy rating with a price target of $225. Brent, welcome to the show.
Thanks for having me.
There's also, I mean, you layer on top, just in addition to competition overall from retail, the other side of the business and the fear that there's overspend on cloud. How do you sort of address these bear arguments?
I think tactically it's right to think that op income could fall in the interim, given what's happening. In the front half of the year, 2/3 of Amazon's profitability is from AWS. And the margins were unsustainable at 36, 37%. So margins will fall in the back half of the year in Amazon AWS. They're getting ready for AI. They're about to launch satellites to help, in rural areas to get access to help those businesses and consumers. There's an advanced investment as we go into the holiday season. So I think given the outperformance in the margin, and remember, they have been beating pretty big on op income, that would this slow, and I think that most of us all have that in our model. So we believe tactically it's important to call that out, that some of the margins in their most profitable business are probably unsustainable in front of the biggest AI wave and tectonic shift that we're seeing. So I think everyone should be braced for that. The question is this the new Amazon where they're going to spend and margins are going to be sustainably lower? That changes the profile. The stock works in harvest mode. It doesn't work as well in invest mode. I'm not sure that this is a year-long invest mode. This may be a quarter or two. And ultimately, we believe, again, when you have 50% market share in cloud, you have a huge advantage in AI. And so it's going to take investments. You've seen it in CapEx. You've seen it in their spend. And so we think that this will pay off. So tactically, many of our hedge fund clients are short or underweight Amazon going into this period with the uncertainty that you can see that's building in the model in the back half of the year. My view is it seems to be more of a tactical change. And again, I haven't spoke to Andy Jassy about this, but having spent the last 25 years in the software industry observers like high margins, and Jassy's a software guy. So my sense is he'll find cost discipline and operational improvement in other areas of the business. And we've seen that in their logistics business, the consumer business. He's repeatedly been asked, why doesn't he just parachute everyone into grocery? And he said, hey, we got to get this right. We're not going to just move into a low margin business and not get it right. So I think, again, when you look at the leadership of the company, he understands high margin, high recurring, high visible businesses. And we think that is an advantage for a long-term shareholder, that they're not going to do anything crazy with the cost structure, that this may be a very temporary impact as we go into the quarter. And again, they tend to guide very conservatively on margin. So I think all the fears are warranted. And certainly they've been saying this, they can't sustain a 36, 37% margin at AWS. We have margins going into the low 30s. The rest of the street already has that forecasted. So I think part of this is expected. And then part of it is, like, are we going to open up the closet, and is it going to be something scary, or is it in long term, or is this going to be a short term impact?
Brent, you pretty much addressed my next question, but I'll ask it anyway. What is the one important thing to look for? Now, as an analyst, I think Wells Fargo downgraded the stock today as well. It's got to be hard because you never know what Amazon's going to do. They seemingly can sort of move the needle in terms of operating margins whenever they want. I look at that. Should we be looking more at AWS growth? Like, what's the one thing you think the market's going to be focused on in terms of stock price?
AWS has always been mine. It's 2/3 of their operating income. You're seeing an acceleration in that business. So first and foremost is AWS, can growth continue to accelerate from the low to mid-teens into the high teens, low 20s, and can they sustain that acceleration? And then on the flip side, on the margin, how far will margins fall after they were unsustainably high in the front half of the year? So if we break into the high 20s or low 30s and they don't show acceleration in AWS, then that's going to be the big issue that we're watching. Advertising is number 2, and then the consumer business is number 3, which is a low margin business, and most of our clients are more focused on the high margin businesses.